Hello everybody and welcome back. In today's video, we discuss the stock, commodity and crypto markets right now, including the key levels that you need to be watching over the next 24 hours into the next few weeks. A lot of people seem to be confused by the current market conditions. They don't understand how it rallied so much. They don't understand why it's now going bearish. And of course, more importantly, many people don't know where it's going next. Well, let's take a look at some of the things that we've been theorizing here on the channel for the last couple of weeks. So far, they've been coming to fruition. See you very soon. It's going to be a great video. Well, welcome back everybody to our daily show here for the markets close 31st of March 2022. The quarter is over, and if you like stocks, cryptos or commodities, remember to subscribe and smash that like button if you find value in today's video. So the big story of 2022 is split stocks. Basically, Amazon, Google, Tesla, and now GameStop are all splitting, and it's causing internal increases. Now, this is obviously ridiculous in some ways because they're just splitting stocks and money's going in, but this is the type of manipulation that occurs in markets to try to keep it up. And that's been really the story of the last decade. If you don't believe me, go and have a look at the buyback charts for American stocks. It's a good thing if you're in the right stock at the right time, and it does tend to have some statistical relevance. So we'll talk about that soon. But let's talk about just the general market. It was red, and it was pretty much across the board. There wasn't really too much discrimination on which stock they wanted to sell off. They sold the IWM, the Russell 2000. They sold the Nasdaq. They sold the Dow and everything else, and everything basically ended about 1% down. Not horror story type stuff, but certainly down more than it's been in recent weeks. When we take a look at the sectors, it was mostly defensive plays holding up, utilities, staples, jets, and one of our favorites recently, which has been the solar index and clean energy. They held fairly well. What didn't do well? Semiconductors, financials, and of course also consumer discretionary. We'll talk about that a little bit later. So the story really is right now is inversion. Now I want to bring in a chart that a lot of people have correctly been talking about in the comments, and I haven't brought it up because it doesn't necessarily show us anything right now, but that is yield inversion and the way that it deals with recession. So of course, Gary in our Discord community, join our Discord community, either the public or the private in the links down below, shared this with everybody. And it's a great little comment here about how long on average it takes between a 10-year yield inversion and a recession. 14 months on average, okay? But there are ways of telling even closer to the date, and I think that's something that's very important here. Let's also talk about what we expect to actually occur here over the next few weeks. Now, we've discussed this in many videos, so we'll go through it fairly quickly, but basically the SP 500 forward returns after 93% of components are above their 20 MA, which is something that has occurred recently, is generally positive over a 3-month time frame. Now, what I'm really getting at here is that in general, we do have some kind of bullish sentiment here in markets. And even if we start pulling back to the key levels we're going to discuss, April is a very, very bullish time. We know that it's positive 93.8% of the time. That's a stat that's hard to fight with, and it tends to be one of the best market months of the year. If you think about April, weakness at the start is common, followed by strength, followed by weakness in the end. And of course, at the end of April, what happens? We have earnings and we have the FOMC coming out, and it's expected they're going to raise rates several times this year, obviously 50 basis points. Could this be a buy the rumor, sell the fact? I think it could be. Last time it was sell the fact, buy the rumor. Very confusing if you don't understand these types of things occurring. So we've got all of these midterm years. You can study this chart a little bit more by pausing it, but we'll scroll over and let's now talk about the technical analysis, because this is where things get interesting. So here is the US 2-year, 10-year, basically inverted, yeah? It went to 1. It hasn't gone over it yet. Usually with inversion, if it is going to turn to a recession later, it tends to hold above there for a little period of time. You can see over here the weekly, and back in 06 to 07 before the GFC, it inverted several times before the whole thing occurred. So this is the US 2-year versus 10-year. It's shown most recessions in the past. There is another one though, and that is the 3-month versus 10-month. And yes, I see your comments down below. Don't worry, I read many of them. So always do comment. It does help us out, and I'd love to hear your opinions on things. And this is the 3-month versus the 10-year. Now, it's obviously not inverting. In the past, it has inverted very similarly. In fact, closer to the date of the recession. Now, the reason why is because the Fed is obviously moving the 2-year and the market is moving the 10-year. People don't quite understand this. The Fed control the close rate. So they control the 3-month, they control the 2-year to a degree. The market controls the 10-year. So when the market disagrees with the Fed, and the Fed tends to not really know what's going on, and the market is more correct most of the time, that's when you've got problems. So that's why we're getting inversions everywhere. We've got the US 20, 30 year, we've got the 5, 10 year, we've got the 2, 10 year. And now do we end up seeing, as the Fed aggressively tightens here, an inversion caused by themselves, a 3-month, 10 year? This is what people will really be watching. And I think you need to start moving over to that chart moving forward in terms of whether you're going to freak out about the markets and call a recession, or whether you're going to sit back and say, okay, well, let's see a little bit more information. Remember, the 210 doesn't usually lead to an instant drop. Let's talk about the VIX. The VIX bounced off 20. It's exactly where we expected it to occur. Obviously, the VIX has been dropping hard. 20 is where bear markets or fear comes into the market. If you're above 20, you're fearful. If you're below 20, you're in more of a swing traders market. Bit of a rule of thumb I always use, if you want to be a scalper or a day trader, when the market is above 20, what a great time to do so. Let's talk about commodities. So gold, long leg doji here on the close. Very interesting close for gold. So we've been theorizing for a little while here that gold may be bottoming, but we haven't been interested in it too much. We've seen the bounce twice now off 1900. We know that if the market closes below here, technically it's not a good sign, and that could certainly draw down a lot for gold. So I'd be very careful around this level. Obviously, I think bears will come back in. But let's think about what's happened here. We've got buy week, we've got a little bit of follow through, followed up by a long leg doji. Now, long leg doji is a high, a low, and an open and a close. Indecision, effectively. It's a neutralized candle. Now, the importance of this is, what is this in essence? Pretty much a double bottom. A double bottom moving towards the 78.6 fib retracement of this massive bust that occurred recently after the parabolic move. This is where there is an imbalance to a degree. So I think the market's moving towards this and wants to do it. But that being said, just because it wants to do it, or we think it wants to do it, doesn't mean it's going to happen yet. So if it breaks through and gold goes above this level, is that going to be strong for the metals? You'd have to think so. If it closes above this long leg doji, is that a good precursor sign? Absolutely. And that's where some people's systems, maybe you have scale in systems, something that I certainly like a lot. Scale in, scale out. It's what the big guys do. Why shouldn't you be doing it? They're the types of things that start to come in play. So gold here looking better than it has in quite a few days. Now we go over to the other commodity, oil. Now I think the community picked this perfectly. So well done to all of you. I'll give you a clap. Well done, guys. You picked this well. Basically, we got that parabolic movement. We got a crash. And then, of course, we saw the retest back up. Now, I think that oil is quite muddy now in terms of it's difficult to read right now. This was easy. Maybe this was easy as well with the double bottom on the small time frames, and the parabolic nature we also got correct here in the markets together. We knew that this was unsustainable. Now it's a war between, in some ways, the governments, because of course they're all trying to figure out how to reduce the oil cost as much as possible. It does hurt and is a lead sign usually of recessions as well. It's one of those lead indicators. So oil becomes a very difficult chart to trade. I just think that, we'll keep following it. We'll keep looking at it. Maybe you disagree with me. Maybe you think it's been easy. I'm not sure if we have a clarity yet on where the next direction is. Now let's go over to Tesla. So Tesla stopped at our 1,110. Now we knew that was a very good resistance. And why? Because realistically, this was exactly where the previous resistances had been. We had incredible amounts of days up. I think it was like 10 or 11 days up. Amazing. Gamma squeeze, all sorts of squeeze. Is it time now, though, for Tesla to come back down, at least retest some of the buy zones? So if the market's going to come back to the levels that many people want it to go to, which makes perfect sense in some ways, this is a good level. Why? 1,000 is clearly buy pressure and a massive psychological zone. And these are the two big levels, 1,000 and around that 945, 950 from a technical basis. Now, if you're feeling bullish, the problem is you're at a resistance. So if you're feeling really bullish, which, may work out over the next week, 2 weeks, month, obviously April we saw do quite well. You really want this market to breach this zone up here, this 1,110, because if it does, where's the next logical resistance in terms of participation? We've got to think it's around that 1,200 level, yeah? So that becomes incredibly important here on the charts. And it's kind of similar to the Apple scenario. We had Apple moving up 11 days. Now, I told you in my trading career, which has spanned 14 years here, I don't really know if I've seen it very often on stocks where we have 11 days straight up, not one down. Statistically unlikely. And that started getting our spidey senses out on this day here. Now we're underneath that level. So it turns out we were correct and the market is coming back down. That's good. Great. We're correct. Now what do we do? It becomes the question. So it looks like Apple is weakening here. And this is really a bit of a barometer of the market strength and weakness right now. We know Apple is out of control. They love it. The market loves it. It's got gamma squeeze. It's got all sorts of things going on. And if it does pull back to a certain area, would it make sense to potentially bounce here? Well, let's get a fib out because fib retracement is your friend if you're still feeling bullish on the market. 38.2, 20 fib, 20 moving average exponential, previous resistance, previous support. It'd be a pretty cool level around here to be spotting zones that you might want to use your systems on and bring in your own ideas and just have a look at the key level and see how you can deal with it. So certainly an interesting area for the bull case. Of course, the bull case remains new peak over here. I'm not sure it'll stop at that resistance. If it went like bam, bam, and then goes through this level, even though that's resistance, based on everything that's occurred before it, higher chance of breaking to the new high. So there are bull and bear cases, there always are. The question is, do you know the key levels to be looking at and how to then spot it past that point? Let's move over to ARK. Now, ARK is the barometer of, let's call it hyperstocks. This is the area where we check out whether there's risk on or risk off from a hyperstock perspective. It's been doing well, it hit that resistance, and now it's coming back down to the 20 moving average. So again, if the market drops a little bit here, do we expect weakness in ARK? Yes, I don't think that it can hold up against those types of things, but these stocks do look a lot better. And remember, they are heavily sold off in the current market. So there's still more potential rally here in them. If you think about just a few, I'll load up one here. We'll put in square just to show you. Many people will see this as Wyckoff accumulation. They're not wrong. We've got 2050 cross. We've got consolidation here. I've seen worse charts in my life. Let's just say that. Let's move over to the DAX. Now the DAX here was super interesting. And we've look, again, well done community. We've certainly brought this together. And I've got to say well done because look at this Wyckoff. So we had the Wyckoff, we had the false breaks. It was our best signal that we ended up getting into the Russia-Ukraine crisis. Support broke through, showed weakness in Europe, outflows, everything happened as we expected. It's then rallied all the way back up. Where did it find resistance? Well, it was exactly where we kind of expected it to, on the bottom of the previous support wicks for the DAX. So it's now shorting off. Now, the more this shorts, the worse it is for the US as well, because it's showing an outflow. And you might say, well, Tom, isn't that showing outflow from Europe and therefore America is the better market, so people coming into America? Comparatively, yes, you might say that America is stronger than Europe right now. But if this market starts dropping, it shows a sickness that then it spreads, and that sickness can be spreading into America as well. Remember, the problem over here is also a problem in America as well. It's just not going to be as bad in terms of raw percentage movement. So let's talk about the DAX. Yeah, we've got a support here at 14.2. Now that's important. If the market comes down, the DAX needs to hold around this level, 14.2 to 14,000. This area becomes really important because if it doesn't hold here, it could start free falling. That wouldn't be good for the month of April, the statistics, the seasonality, all those types of things. So it's a bit of a lead indicator here. Same with IWM. You know, it needs to hold some of these next zones. It's obviously not very good from giving you legitimate signals. Often IWM gives you a little bit of false signals, I think, but it's hovering, it's coming down, and this is a good barometer again for things like the hyperstocks. So we'll come back to that chart moving forward. This is where I want to get to. So consumer discretionary, 1/3 of the US economy is based on consumerism, spending, you know, buying stuff. And we all like a new Android, a new iPhone, a new whatever else. And this kind of shows us whether risk is on or off. Now, there are other ways to tell, but this certainly is another risk on, risk off kind of market. It's pulling back. Where becomes a logical conclusion for it to pull back to? Previous resistance, now currently potentially support, 20-50 moving average. Now, if you know anything about moving averages, it's not so much the crosses that are key. Let's just say the death cross doesn't work very well, does it? But it's really about recognizing them as dynamic support or resistance, something we teach about in our Ultimate Masterclass. If you're interested, you can check it out on fxevolution.com. Very important stuff, though, to understand. Dynamic support resistance. So certainly coming up to a key level. We get a fib retracement out, which we've been doing a little bit here, 38.2 fib. We explain this in our course as well. 38.2 fib is very good. In fact, my favorite. 38.2 is good. 50 fib is good, 61.8, certain circumstances, but not always. The golden fib that built the pyramids or whatever, however it worked, that's not necessarily that golden always in the markets. It's good for certain occasions and certain things. So in our private community, I did a video yesterday and we were talking about scenarios where the market starts to weaken. And one of the things that I was mentioning was that we actually haven't seen any real change of trend the whole way through this. And what I mean by that is it's always been making higher peaks and higher troughs and higher peaks and higher troughs. This is the first time where we have a peak, we have a trough, we have a lower peak, and we have a lower trough. We've also busted through this little trend line that's coming up. So it theoretically does look quite negative on these charts. Let's go over to the daily and now start to break it down. So does it look more negative than positive? You'd have to say short term, yeah, it does. What could happen next? Well, there are several people out there that are calling for these types of numbers. And I think, again, it makes some sense. You get a fib retracement out. You think about it similar to the scenario we had before, which was XLY. They're getting near these moving averages, 20, 50 moving average, sitting just above a 38.2 fib, which is sitting just above, all of these previous kind of resistance here. So we've got resistance becoming support right around it. And there's box zone here where I think many people will have to be careful on how they treat this market. It's bullish at the moment. It probably will have some kind of buy the dip mentality. Now that's obviously a guess. It's based on what we're seeing in the sentiment. But if it pulls back, many people will be willing to buy it, and especially into the month of April. That's just the reality of the data and how we see it right now. If it falls straight through, well, that's going to be a different story, but it seems unlikely. Here we have the SP 500, and again, we've got a nice decline here. We scroll through, we grab this, and you're thinking maybe a 38.2, maybe a daily. So these are the areas that you're starting to focus on. Between that 50 and that 38.2, we have previous resistances. We've got a little bit of resistance here, which could act as support. We've got dynamic support as well. So it's a bit of a range, but certainly an area. And remember, it's not so much about picking the perfect price. A scalper might say, I have to be within the point. But somebody that is a day trader or a swing trader or a multi-month trader or an investor or whatever, they're not caring too much about the exact price. They just want to be in the right zone. And that's what you're really looking for. You're looking for supply, you're looking for demand, you're making that, and you're also looking for potential imbalances or participation phases in the market. It all becomes very important to understand these concepts. So let's talk about Bitcoin. Obviously, S&P 500, it becomes pretty clear. I'll just go back there quickly. If it breaks a new high, next level you would think is around that 47.50. Previous resistance across here, very strong level of resistance. So breaking a new high, okay, cool. Things are on, risk is on, April, that type of stuff. But for now, it does look more weak than positive. So let's talk about Bitcoin. It's dropping. As we know, Bitcoin is basically a risk on, risk off asset. It still looks really great on the charts. Obviously, a bit weaker here in recent days. Where does it stop? Does it stop at the bottom of the box down here? 44,000 potentially. That makes some sense. Let's grab a fib out. Again, if you're feeling bullish on this chart right now, you might want to grab a fib from the top to the bottom. Understand where that fib is, which is sitting around that 38.2, 20, and the 44,000. So yeah, it's around the right area down here. It makes some sense. Some things we want to check though before looking at Bitcoin. Remember, if it breaks to a new peak, we're talking 52 is the next resistance. That's a pretty big deal. Is Bitcoin short? So BTC short's dropping here. So it's not like the big whales, the nasty whales out there, are shorting Bitcoin. In fact, they're not really looking at necessarily being negative here. That's a good lead indicator showing us that there might be some strength here as long as the stock market can hold up as well. And then we move over to Ethereum. Now, is Ethereum holding better than Bitcoin? This is the question we've been asking ourselves for the last week. And we've theorized that Ethereum is better than Bitcoin right now. And guess what? It totally is. Comparatively, ETH-BTC ratio has held well. It still wants to break through. It's still theoretically underpriced to Bitcoin, theoretically. And of course, if Bitcoin drops more, if Bitcoin gets tanked, obviously Bitcoin's going to hold better than Ethereum. But if this is just a pullback and an overall rally, there is a real potential here that Ethereum may still continue to outperform based on this chart. So bringing this stuff in is super important to our understanding of the markets. Obviously, if you haven't already followed us, come and do so on FX Evolution on Twitter. We post a lot there. Join our Discord community, links in the description below. And remember, this is non-farm payroll. So Friday, we have non-farm payroll change. That's a huge reason why I think a lot of risk off came through. The reason, it's scary. Going into something like non-farms, sometimes it can move markets a few percentage points. Sometimes it doesn't that much. But because every bit of economic news at the moment matters to the market, this will be what all eyes are on. 8:30 a.m. New York time and 10 a.m. ISM manufacturing PMI. Now, a lot of people always ask me, Tom, what do you think about the employment change? Where do you think it will go? Here's the problem. I don't really think anybody really knows. And the reason why is because even the market has no idea what it wants to do with it. Sometimes you'll see, if you've watched enough non-farm payrolls, the news will come out. And agree with me in the comments if you've seen this. Verify it for everybody. Tell me if you've seen this. It'll go off in one direction and then completely reverse about 15 minutes or an hour later and go off in the other direction. And it's because of the complexity of the number. They want to find out whether it's real or whether it's fake. Where did the jobs come from? All of these types of things. So if you agree with that, put it in the comments down below. Obviously, subscribe if you enjoyed today's video, and we'll see you in the next one. Bye for now. Good luck on Friday.